Okay, hopefully you can hear me now. Can you hear me now? Microphone test. Okay, so let's get back out of here. Thanks for your patience there during our volume test there. So to qualify for a solo 401k plan, you have to be self-employed with no full-time employees who work 1,000 hours or more in your business. Your spouse can also participate in the plan as long as he or she works in the business. Here's an example of a one participant plan. So here, the self-employed business sponsors the plan. You're going to see that there are a total of 3 separate holding accounts. So separate bank or brokerage accounts for each source of funds. So one to hold the pre-tax solo 401k funds, the second one to hold the Roth solo 401k funds, and the third one to hold the voluntary after-tax solo 401k funds. So you are required to have separate holding accounts under the plan. It's still just one plan, but you need to have separate holding accounts for each source of funds and each participant. Here's an example of 2 participants in the plan. So both spouses, for example, participate in the same plan because they both work in the same business. Here you would need a total of 6 holding accounts to hold each participant's pre-tax, Roth, and voluntary after-tax solo 401k funds. The self-directed solo 401k from my solo 401k financial is drafted for the maximum flexibility under the law, which means that you're going to be able to make these contributions, whether you make them now or later, you're not going to lose that ability. So all these source options are available within the plan. The self-directed solo 401k establishment process is very straightforward. We collect information via our online application. That's how we collect what's needed to draft the plan documents. We then draft those plan documents same day, send you a download link. You sign, upload, then you let us know whether you want to use your local bank or a brokerage firm to hold the funds, and we'll draft those applicable brokerage forms. If you use a brokerage account, if you decide to use a bank, we'll provide the necessary documents to take to the bank, and we'll speak to your banker about opening up the holding accounts. And then step 6 is where you fund that solo 401k plan, which can be funded by making annual contributions and or by transferring IRAs and former employer funds to the plan. We're also going to go over some of your questions here while we go over these this presentation as well. So let's see here. Got a question here from Chris. My question is, how do I send my current Schwab account statements in so you can include them in the account setup that I've already completed? I want to do the discounted drip at Schwab with my new account. Is that something handle post account? So we'll help you open up the company retirement brokerage accounts at Schwab for the self-directed solo 401k that we offer. We'll draft those, get them over to you for signature. We'll then fax them to Schwab. Once those accounts are open, then you can make contributions. You would work with Schwab regarding any type of drip discount. You can check with them to see if it's available for the company retirement brokerage accounts that are provided for a solo 401k from a third party such as our company. We don't need to be provided with your Schwab account statements unless you currently have a existing individual 401k at Schwab that you're going to restate over to the solo 401k plan with us, in which case we would collect that information to prepare the transfer form at that time so that your existing Schwab individual 401k, including its assets, are moved internally to the new company retirement brokerage account at Schwab for the solo 401k with my solo 401k financial. Here's another question here. What is the maximum solo 401k employee deferral contribution for someone who has an unrelated employer who provides a 401a with voluntary contributions? With this 401a limit solo 401k contributions. So if you currently have a 401a or 401k with the current employer, such as your daytime employer, those contributions to that daytime employer would be based from your daytime employer um, W-2 wages. You can also have a solo 401k for your side business. So if you're also self-employed on the side, you would open a solo 401k plan with us, or if you already have one with us and you want to make contributions, then if you want to make a voluntary after-tax solo 401k contribution, any contribution you've made to your daytime job plan, such as a 401a or 401k, will not impact your voluntary after-tax solo 401k contributions. For example, for 2024, the overall contribution limit to the voluntary after-tax solo 401k bucket is $69,000. For 2025 is $70,000. So voluntary after-tax solo 401k contributions are based from your net self-employment income from your business, but they're not impacted by any contribution you make to your daytime employer 401a or 401k. On the other hand, if you're trying to make employee pre-tax solo 401k contributions or employee Roth solo 401k contributions, those will be impacted by your contribution, by your employee contribution that you've made to your daytime employer 401a or 401k. Now, on the other hand, profit sharing contributions, known as employer contributions, they're not impacted by contributions made to your daytime job 401k or 401a. We're talking about that 25% employer solo 401k contribution, or 20% in the case of a sole proprietorship or partnership. All right, we'll come back to some more questions here as we keep going through some slides here. So here are some items to consider when opening a solo 401k plan. You want to determine how many participants there will be. For instance, if both spouses participate in the plan, that means you've got 2 participants in the plan. The types of funds that you're going to be transferring to the plan. For example, IRAs, former employer plans, can be transferred to the solo 401k, whether you're going to want to open up bank versus brokerage accounts to hold the funds. Most clients will just utilize brokerage accounts because they'll be able to invest in equities through those brokerage accounts, as well as real estate and other alternative investments through that same brokerage account through Checkbook Control, which is available at Fidelity or Schwab with our solo 401k plan. This just talks about the types of accounts you can transfer to the 401k, former employer plans, traditional IRAs, including former employer Roth 401k funds. You cannot transfer a Roth IRA. Here are some things to consider when opening a solo 401k plan. Any business type can sponsor a solo 401k, so it doesn't have to be a S corporation or an LLC. It can be a sole proprietorship where you file a Schedule C or a Schedule F if you're a farmer. You do need to report self-employment income for the activity done during the year, your self-employment activity. Both spouses can participate in the plan. You are going to need a separate employer identification number for the solo 401k, which is important for usage when opening the bank and or brokerage accounts, as well as for Form 1099-R reporting for distributions and conversions, including the mega backdoor Roth solo 401k conversion on that Form 1099-R, where the EIN number for the plan is used. All right, let's take a look at some more questions here, and we'll continue to go through the webinar here. Okay, let's see here. Here's a question from Jorge. If I only use the solo 401k for real estate transactions, will that trigger a self-dealing alert? Not necessarily, because keep in mind that the key is that you open a self-directed solo 401k with a company like my solo 401k Financial, whose plan documents allow for investing in real estate. So investing in real estate is an allowed investment, whether it's family homes or commercial real estate, for example. So no, that doesn't trigger self-dealing because those are allowed investments within the plan. Let's take a look at another question here, and then we'll keep moving on with our presentation here. Got a question from Sarah. Good morning. I'm investing my solo 401k in a private real estate syndication from my new Roth solo 401k. at Fidelity. It says syndicate sign-up page is asking the following title of membership interest. Select either one as trustee of trust or two. Others such as corporation, LLC, partnership, employee benefit plan, KEO plan. Other entity, I'm assuming I should select one, but want to confirm with you. So let's see here. So you're actually making the investment through the solo 401k plan, which is a retirement plan. So you're going to want to check off that box, and the title of that investment is actually going to read the participant or the trustee's name, comma, and then the plan name. So let's say the plan name is XYZ Trust. So the title would say Sarah Wilson, comma, trustee of XYZ Trust. That's how the title would read. And you would check off a box that reads that it's a retirement plan. So the member is your retirement account, but you list your name first because you're the trustee of the plan. So Sarah Wilson, comma, trustee of XYZ Trust would be the example here. Okay, let's take a look at some, let's switch gears over to the Mega Backdoor Roth Solo 401k plan. So a self-directed solo 401k from my solo 401k financial allows for voluntary after-tax solo 401k contributions, which is part of the Mega Backdoor Roth Solo 401k plan. So there are several steps in the Mega Backdoor Roth Solo 401k strategy. So obviously you have to open up a self-directed solo 401k with the solo 401k plan provider whose plan documents allow for the Mega Backdoor Roth Solo 401k, and a company like my solo 401k financial is such a company. And then let's take a look at the steps involved. So let me see if I can get rid of this darn let's see if I can try to look at our slides here. Let's see here. Okay, so the slides are being blocked here. Let's see if we can figure out how to get rid of those slides here. Okay, let's skip over this slide and look at the detailed slide here till I figure out how to get back to it. So here are the steps involved in the Mega Backdoor. There we go, I figured it out there. So step one is to open up the holding account to hold the voluntary after-tax solo 401k funds. So that's where you'll have a separate bank or brokerage account under the plan to hold the voluntary after-tax solo 401k funds, and we'll help you open that up. And then step number two is you make the contribution to the voluntary after-tax solo 401k bank or brokerage account. Step three is where you convert the voluntary after-tax solo 401k contribution to the Roth solo 401k or to the Roth IRA. So you move the funds from the voluntary after-tax solo 401k holding account over to the Roth solo 401k holding account, or it can be moved to a Roth IRA instead. Then you need to fill out our conversion form, online conversion form, so we collect the necessary information to issue that Form 1099-R. We then issue that Form 1099-R to the IRS to report that non-taxable voluntary after-tax conversion as part of the Mega Backdoor. Here are the steps outlined in more detail. So one, you open up the voluntary after-tax solo 401k holding account. That's the bank or brokerage account if you haven't already. You then make the contribution into the voluntary after-tax solo 401k account. So that's a very important step. It's got to go into that voluntary after-tax solo 401k holding account, and then it gets converted to the Roth solo 401k or to a Roth IRA. So you can't just go from step 1 to step 3. You got to go to step 2 and then to step 3. And then step 4 is where you fill out our online conversion form. That's how we're prompted to prepare the form 1099-R, which is the final step. And that's usually done by the following January, February, when that's when that form 1099-R gets issued. So those are the steps in the Mega Backdoor Roth Solo 401k conversion process. All right, let's look at some more questions here, and then we'll continue here with the presentation. So here's a good question here. Are solo 401k employer Roth contributions allowed after Secure Act 2.0? You're exactly right. Resulting from Secure Act 2.0, now you can make employer Roth solo 401k contributions. So not only can you make employee Roth solo 401k contributions, you can also make employer Roth solo 401k contributions. And our plan does allow for it. Okay, looks like we have a follow-up question here from Sarah. To confirm, should I elect for title of membership interest as trustee of a trust? So let me go back to your original question here. Title of membership interest, select either 1 as trustee of a trust, 2 such as a corporation, employee benefit. So you're going to want to select option number 2, because that one there is talking about retirement plans. Keep in mind a solo 401k is a retirement trust, but it's not a land trust, it's not a living trust. So it's important that you check off number 2, because in this case here, they're including retirement plans in there, which is an employee benefit plan. A solo 401k plan is an employee benefit plan. So that's the one you want to select. But when you list it on the actual form, you want to list your name, comma, trustee of XYZ Trust. But you're going to want to check number 2 there under other. Okay. Let's see here. Let's go back to the Mega Backdoor here. So under the Mega Backdoor, as we were discussing, you can choose to convert to the Roth Solo 401k or the Roth IRA. This is a question we get quite often. And generally speaking, most clients will convert to the Roth Solo 401k plan from the voluntary after-tax Solo 401k, which means it would be considered an in-plan Mega Backdoor Roth Solo 401k conversion. So here's the reasons to convert to the Roth Solo 401k plan versus a Roth IRA. Well, number 1, it used to be that Roth Solo 401k plans were subject to required minimum distributions. Well, not anymore. The Secure Act did away with that requirement. So you no longer have to make required minimum distributions from a Roth Solo 401k. So now it's on even grounds with the Roth IRA, because the Roth IRA is not subject to require minimum distributions either. So there's really no reason to convert to a Roth IRA from the voluntary after-tax Roth Solo 401k per se. With the Roth Solo 401k plan, you can borrow from it through a 401k participant loan. It is prohibited to borrow from a Roth IRA. You can now borrow from your Roth IRA. So with the Solo 401k, especially one provided by my Solo 401k Financial, you can process a Roth Solo 401k participant loan. You can borrow 50% of the balance, not to exceed $50,000, and you pay back your own plan. Also, in the context of investing in real estate, the Roth Solo 401k has an advantage over the Roth IRA, especially if you utilize debt financing. With the Roth Solo 401k, if your Roth Solo 401k obtains a non-recourse loan, it's not going to trigger unrelated debt finance income tax, which does apply to Roth IRAs when you utilize debt financing and investing in real estate. So that's a major one there. Okay, let's keep moving on here. Now let's switch gears over to the auto contribution credit. A self-directed solo 401k from my solo 401k financial qualifies for the auto contribution credit, which is $1,500. And you're going to be able to basically take a $500 deduction dollar for dollar from your business tax on your business tax return in $500 increments for 3 years for a total of $500. And this applies to new plans that are opened up, as well as existing plans that are established. Let's see if I can get to that here. Let me jump to that slide here. So here's the slides here regarding the auto contribution credit. I'm also going to send over a link of a guest post we did on the auto contribution credit on the White Coat Investor website, which does a great job explaining exactly what the differences are between the auto contribution credit and the tax credit, because the solo 401k plan qualifies for the auto contribution credit. Let me send that over now. I just shared that with you. As far as the auto contribution credit, again, it's available to both new plans that are open in 2025, as well as existing plans that you have with my solo 401k financial, provided it was opened after the middle of December of 2023. So if you have a solo 401k plan with us prior to the middle of December of 2023, your plan will need to be updated for this auto contribution feature, and we'll have to also provide additional documents as part of that auto contribution feature. So you'll want to submit a support ticket to our website if you're an existing client and you need to have the auto contribution credit added to your plan. If it's added to your plan this year, you're going to qualify for that $500 auto contribution credit for 3 years. So $500 in 2025, $500 in 2026, and a final $500 amount in 2027. Let me send over that support ticket link. I just shared that with you there. What's great about the auto contribution credit is that you're not required to contribute to the solo 401k plan in order to take advantage of that $1,500 auto contribution credit. Effectively, the government is trying to get more and more individuals to save for retirement, especially those who are self-employed. So as a carrot to get you to save for retirement, they're saying, we're going to go ahead and subsidize your solo 401k costs in the amount of $1,500 in $500 increments for 3 consecutive years. So again, you're not required to contribute. You can opt out, and you're still going to be able to contribute in whichever amount you want to contribute up to the overall limits. And you're going to claim that $500 annual credit for 3 years each year. So for 2025, you would file Form 8881 to claim that $500 credit. You would file an additional Form 8881 in 2026 with your taxes to claim the additional $500 credit in 2026, and a final Form 8881 would be filed in 2027 to claim that $500 credit. So $500 increments for a total of $1,500. You can learn more about it under the code section 45 like Tom and notice 2020-68. All right, let's take a look at some more questions here, and then we'll come back and keep going over our presentation here. So we've got another question from, let's see here. Here we go. Here's a good question here. What is the difference between mega backdoor, after tax, and just regular employer Roth solo 401k contributions? Not clear to me when we would do one versus the other. That's a great question. So number one, the solo 401k plan for my solo 401k financial allows for the following contribution types: voluntary after-tax solo 401k contributions, employee Roth solo 401k contributions, employee pre-tax solo 401k contributions, employer profit sharing contributions, and of course, catch-up contributions. So most clients do not utilize the employer Roth solo 401k contribution, especially those clients who are trying to do the mega backdoor Roth solo 401k. And the reason being is that it takes less earned income from self-employment activity to ultimately end up with $70,000 in Roth solo 401k funds. Let me give you an example. Let's say your self-employed business is an S corporation. Furthermore, let's say you report $70,000 of W-2 wages under that self-employed S corporation. So let's say box one of that W-2 is $70,000. You're going to be able to contribute that entire $70,000 to the voluntary after-tax solo 401k plan, and then immediately turn around and convert that to the Roth solo 401k plan or the Roth IRA. Now, let me give you a second example using that same $70,000. If you decide to do an employer Roth solo 401k contribution, you're only going to be able to do 25% of that $70,000. So what's the math there? 25% of 70,000 is $17,500. And that's because it's a percentage. So you're only going to be able to contribute $17,500 as an employer Roth solo 401k contribution. Whereas with the mega backdoor, you can contribute the entire $70,000, and that's all you have to report in W-2 wages from your self-employed S corporation is $70,000 to indirectly get $70,000 into your Roth solo 401k through that mega backdoor Roth solo 401k. So in short, those that are trying to utilize the mega backdoor where they want to put as much as they can into the voluntary after-tax solo 401k and convert it to the Roth solo 401k, they'll generally forego making any type of employee Roth solo 401k contribution or employer Roth solo 401k contribution because the mega backdoor gets you there quicker with less income. So hopefully that gives you some good info there. All right, let's look at some more slides here and we'll come back to some more questions. So let's see, we were going to talk about reporting requirements for a self-directed solo 401k. So with the self-directed solo 401k for my solo 401k financial, we'll perform the ongoing reporting for the plan, and that's going to be covered at no additional cost. So keep in mind our annual fee to have a self-directed solo 401k that has all these robust features is a flat fee of $125. And that's for being the plan provider and for providing the required IRS plan updates. But on top of that, we'll also perform Form 1099-R reporting and Form 5500 easy reporting for those clients who timely request it. So we don't have access to your funds, so it's your responsibility to let us know when your solo 401k meets these thresholds so that we can perform this reporting for you. So let's talk about the first one here. The first one is the Form 5500 Easy. A Form 5500 Easy applies once the market value of your solo 401k plan is greater than $250,000. So that means you got to look at all of the participants' funds in the plan. So you have to add them all up together. So when you add up all the participants' funds in the plan, and if the threshold of greater than $250,000 has been met, that means that a Form 5500 Easy needs to be filed. So here's an example. Let's say you have two participants in the plan, both spouses. So you're going to have to add all these holding accounts for both spouses together, as well as all the investments in the plan. When you add those together, if the market value is greater than $250,000 in value, then a Form 5500 Easy needs to be filed. So it's at the plan level. That's why you have to add all the participants' funds in the plan. Let's go back to that slide about the Form 5500 Easy. So, for example, if you have a plan year ending December 31st of 2024, and if you look at the total value of your self-directed solo 401k and the market value was greater than $250,000, you're going to need to file a Form 5500 Easy by July 31st of this year. And you also have to take into account if you also have a defined benefit plan for your self-employed business. Many of our clients have what they call DBKs, where they participate in a solo 401k plan as well as a defined benefit plan. So if both of those plans together in aggregate meet that greater than $250,000 filing threshold, you're going to have to file a Form 5500 Easy, one for the defined benefit plan and a second one for your solo 401k plan. And if you kindly request for us to prepare the 5500 Easy for the solo 401k, we'll gladly prepare that for you. And then for your signature, and then it gets filed electronically with the government. And that needs to be done by July 31st of this year. Another reporting that we provide to our clients who timely requested is Form 1099-R. So Form 1099-R applies when you take a distribution from your solo 401k or if you process a conversion, such as the Mega Backdoor Roth solo 401k plan. So if you processed the conversion last year or took a distribution last year, then the Form 1099-R will need to be issued this month into next month, and we'll file a copy with the IRS. But you need to timely request that from us. Typically, you want to request that to us by December 31st. And then we'll go ahead and prepare that Form 1099-R. So again, this is all covered in our annual fee of $125. Okay, let's take a look at a few more questions here, and then we'll finish up today's webinar. And keep in mind, we'll have another one of these here in a couple hours at 1 p.m. Pacific time. So another question here. Here's one here from Jorge. Self-employed, no employees. Let me see if I have the steps correct. Open a solo 401k with my solo 401k financial. Open bank account for the solo 401k. Contribute to the solo 401k. Open the Roth solo 401k holding account. What are the rules if I want to finance or refinance the property while it's held within the solo 401k plan? So yes, let's go back to the steps in opening a solo 401k plan. Let's see here. I had them here earlier. Got a couple of different slide decks going on here. So here we go. So the steps are exactly, you complete our online application. That's how we collect the necessary information to draft the solo 401k plan documents. We then drop those plan documents. We email you the download link. You download, you sign, upload, then we help you open up the bank or brokerage accounts, and then it's time to make the contribution by transferring former employer plan funds or the annual contribution or both. And as far as investing in real estate, title to that investment would be in the name of the solo 401k plan. The solo 401k plan would then obtain a non-recourse loan. We have a list of lenders on our website who will lend funds to a solo 401k. You then use those funds in conjunction with your solo 401k funds to invest in real estate. And then the property gets rented out to a non-related party. Those rental incomes flow back to the solo 401k plan. They'll maintain their tax deferred status, so they'll be tax sheltered. When it's time to make note payments on a non-recourse loan, they're made from the solo 401k plan. All right, let's continue with our presentation here, and we'll keep on looking at some questions as we do so. We're almost done here. Let's go to the, let's briefly talk about the solo 401k contribution limits, and then we'll be done here. So for 2024, the contribution limit is $69,000. That's the overall contribution limit. Keep in mind, for all contributions to a solo 401k plan, they're going to be based on your net self-employment income from your self-employed business. So you're going to have the necessary self-employment income to justify these contributions. You cannot contribute based on your daytime employer wages, in other words. It's got to be based on your self-employed business earned income. So for 2024, as I mentioned, the overall contribution limit is $69,000. It increased by $1,000 to $70,000 for 2025. The catch-up contribution, which is for those who are age 50 or older, remained at $7,500. So it's $7,500 for 2024, and then for 2025 is $7,500. For 2025, there's a new catch-up contribution called a super catch-up contribution, which only applies to a certain age group. So it's $11,250. That's the catch-up contribution. That's the super catch-up. But it's only available if you're age 60, 61, 62, or 63, and it's only available for 2025 and years going forward. So it's not available for tax year 2024. So unless you fall under the age 60, 61, 62, or 63 age category, you're not going to be able to do the super catch-up contribution. Instead, you'll be able to do the $7,500 catch-up if you're age 50 or older. And you can do both. It's either one or the other for those that qualify for the super catch-up. And this change is resulting from Secure Act 2.0. Now, for 2024 solo 401k contributions, you still have plenty of time to make those contributions here in 2025. You simply need to make them by your business tax return due date plus timely filed extension. And that's true for both employee and employer contributions. So the mega backdoor as well. For 2025 contributions, you have a lot more time. You can make them this year, or you can wait and do them next year in 2026 by your business tax return due date plus timely filed extension. So these are good slides here to take a look at. We already talked about how the solo 401k plan for my solo 401k financial allows for participant loans. All right, so let's take a look at some questions here, and then we'll be done with our presentation here for this morning. Let's see here. For the restatement of new plans, do we need to get the EIN for you before signing solo 401k documents? No. We'll get the EIN number as part of the setup process. So once you return those signed solo 401k documents, we'll proceed in getting the employer identification number for the solo 401k, which we can obtain in a matter of 5 minutes, typically the same day. Looks like we have another question here from Sarah. The syndication is asking if my solo 401k is disregarded for federal income tax purposes. Yes, no. They stay disregarded entity for U.S. federal tax purposes, an entity that is disregarded as an entity separate from its owners. Common examples of disregarded entities include most single member LLCs, grant or trust. If the entity reports all the income lost directly on your personal return or another entity does not file one separate tax return. So good question. Let me pull up a cheat sheet here and I'll share that with you. So the real estate syndicate, the partner, the limited partner, the general partner is going to issue a form 1065, so K1, to report the gains or losses resulting from that solo 401k syndicate investment. Let me pull this up here and share it with you. One moment here. All right. If I can find that darn. So here it is. I found it. So take a look at this link here I'm going to share with you. I'll answer your question as well. So number one, there should be if you look at the Schedule K1, there's a number 12 in Section 3 that reads, if this partner is a retirement plan, check here. You're going to want to make sure that that box there is checked off. As far as the type of investor in that limited liability, in that partnership or limited liability company, you're going to want to check off the one that reads, it's box H2 that reads, if the partner is a disregarded entity. So you're going to check that box. Then you're going to put the EIN number where it says 10 TIN. You're going to put the EIN number there for the solo 401k. So the employer identification number. Where it says name, that's where you're going to put your name, Sarah Wilson, comma, trustee of XYZ Trust. So make sure you check that box and then you enter that information listed there, and then make sure you also check off box 12 in part 3. All right. I think we are at the end of our questions here. Thanks for joining today's webinar. Again, we're going to have another one of these today at 1 p.m. Pacific time. Until then, have a good day.